Lastly here, this is a nice graphic, a display of the audit opinion process. How do we conclude our audit? What's our whole process? So in this case, we're going to say it's a December 31st year-end audit. So this is a full, like, end of the year is just the fiscal year, 12/31. What happens here, and this is, let's say, June 1st to October 20th. These dates, none of these dates are hard, set, and fast. We say, okay, interim work is being done now. Now, it doesn't have to be June 1st to October 20th. It could say July to October or November. It's just generally a few months before the year end. Because when are we doing our main work? We are auditing this year. Let's say this is year one, and then after this, January starts year two. In this period, this is before, so this is the year that we're actually auditing, but the year's not done yet. So you're saying, how would we audit that year? How would we assess what's going on in the financial statements for that year? Well, we wouldn't fully. What interim work is doing, this is essentially beginning the work on what has happened already. So maybe we're technically auditing January of year one to June 1st. And then we're kind of doing like half of the year so that there's less work for us to do once we get to the end of the year. Because a lot of times there will be specific deadlines, SEC deadlines, PCAOB deadlines that say you have to have your financial statements ready to go, your audited financial statements by March 15th or April 15th, something like that. So the sooner you can get a jump on your work, the sooner that you as the auditor can get your opinion out. That's what we're dealing with here, interim work. Now, the running joke in firms, if any of you see where I'm going with this, is you'll be assigned to interim work in the summer when generally audit work is lesser and you don't have as much to do. And the joke is that, well, you're doing interim work to lessen the workload for when you have to cram, you do your busy season, January to March or something like that. And it really doesn't lighten the load. You still are going to end up doing a crazy amount of work come year end. But this is, so if anyone ever says, hey, do interim work. No, hey, if you had the experience where doing interim work actually lessened the load for you come your audit period, then good for you. Props. I'm not saying it's always going to happen. And yeah, we're going to assign how many hours we're going to spend to this. This is agreed upon when we start the engagement. We say, hey, audit client, we're going to spend X amount of hours on this, X amount of hours on this. And what are we going to do for interim work? These are all items we're going to do during our normal audit testing as well, right? All of these specific confirmations, cash recs, these are all things we'll talk about in substantive procedures, different testings that we do. These are all going to be done during interim testing as well as at the end of the year. So one thing also to take note of, per the AICPA, per what we need to know for the exam, if the audit, like when we get to audit risk, for some audits, you could just do interim work and then not test the rest of the year. Now, that's pretty much contrary to a lot of big audits in real life. Now, I've never worked on a small audit in my experience, but from what I understand as well, from those I've talked to in the industry, you can do this as well. You might think, well, how do you get assurance over an entity if you don't audit the last couple months of the year? Well, it's kind of like if you do enough work in the beginning of the year to audit it, and you see that their internal controls are operating properly, you have enough assurance to give an opinion on the entity. That's something that, now in reality, like, can I say in reality? Because there's a bunch of different realities, right? There's a lot of realities. There are smaller audits, there's massive audits, there's non-issuer audits, there's a lot of different types of audits. So anytime I kind of give that say in reality, or for the exam, in reality is going to differ. Reality is kind of whatever anyone wants it to be. Now, what is going to happen here? This is also not hard and fast. It's not December 27th to January 3rd. It's just around this period. This is cutoffs. This is when we deal with any issues of making sure that the transactions are in the proper period, because whether or not a transaction is in the right month is not as big of a deal as whether or not a transaction is in the correct year. We are auditing year one. We're not auditing month October or something. So making sure that all of the revenues, expenses, assets, liabilities, equities are in the correct period, reporting them properly, that's critically important. Here's where we're going to make sure that the inventory is cut off. We have a specific amount in mind for all of this, right? Making sure that come December, we've got this end date. That's what cutoff is. Then we've got year-end work. We jump in here. Client closes the books. We've got the finalized, well, not the finalized financial statements. We've got essentially draft financial statements. If you discover anything in your auditing procedures that you do, you're going to revise the financial statements. If you deem it necessary, you're going to review any AR collections, follow up, search for unrecorded liabilities. Not really getting into this too much. Again, this will be beaten to death when we get to our audit testing. And then, you're going to go on to issue your audit report. You're going to obtain a management representation letter at the last minute, dated February 10th. These, again, not real dates, just dates we're using for this example, but these are reference dates, or it would be around these dates, something like that. It could be all the way, like I said, March 15th, April 15th. Also, an audit doesn't have to be the fiscal year. It could be a 630 audit. Audits can be done, obviously depends on the entity, depends on the rules, but you can have an audit where the year begins July 1st and ends June 30th. A lot of times accounting firms, their year ends are July 1st to June 30th. And that makes sense because, well, the year-end process for any company is a lot of work, and they don't want their year-end process to coincide with all of their clients. All of their clients are ending at the same time, 12/31. This is the general audit process. I'm going to talk about it many times throughout the course. It's obviously critically important, making sure you know what the heck we're doing. I like to put it in context. I don't want anyone being confused. There's a lot of just straight memorization, a lot of things you just got to get down, and that's fine, right? That's totally fine. Just making sure that you have a full picture. With that being said, let's wrap up with a nice summary and call it a day on our first lesson. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.